Thanks very much, Chris. Look, it's great to be here in Tokyo again, although I've got to say my children's influence means that I always feel like I'm reliving a scene out of the Disney Cars 2 movie around town. But it's great to be here and to see so many of our members and our official sector partners from across Asia Pacific and beyond. Of course, it's a very dynamic time across the financial services industry at present, and we have a very distinguished panel here to explore some of the themes, I think probably building on the themes that we covered in the sessions yesterday, in terms of digital transformation, in terms of how data is used, but also perhaps how it is transferred and some of the obstructions to being able to use it across borders, perhaps in a similar way of what we're seeing in trade, and also some of the emerging themes we're seeing around social demographics and around sustainability. So we'll weave each of those themes together as we look at the future of finance. And we're going to step through a sequence of three aspects to that. I'm firstly going to ask each of the panellists for a view on the outlook for the future of the industry. We're secondly going to talk about some of the challenges and barriers. And then we're thirdly going to look at how financial services fits together with society in supporting a digital economy and in terms of some of those shifting demographies and social expectations. I'll seek our panellists' views across each of those topics, but just the reminder that you can, of course, submit the questions to me via the app, and I'll make an effort to work those into the conversation as we go. But look, let's start firstly with the outlook for the industry. And Hirano-san, if I can start with you, digitisation brings both challenges and opportunities for our industry, not only with the emergence of new technologies and also new players in the marketplace, but also with the rapidly evolving expectations that customers have in terms of personalisation and customisation. How do you see the outlook for the industry in terms of business models and market structure?
Well, good morning, everyone, and thank you very much for inviting me to this panel. My short answer to your question is digitization is not optional, but something we have to pursue in order to survive and thrive to create the future business model of finance. For existing banks, there are two dimensions. The first one, needless to say, creating the new products, services, and offering to the clients, starting from the full-fledged online banking service, robo-advisors, or data-driven consumer finance, or AI-driven trading activities, etc. And I think through those innovative ways, we can achieve both the financial inclusion as well as the new customer experience. But at the same time, perhaps in the short run, what's material for us is efficiency, productivity, improvement. When I announced the 9,500 manpower equivalent, the workload reduction within the coming five years, while we have just 40,000 employees here, so that's a possible 25% equivalent reduction of manpower. That gave a kind of shock to our society, but that is the reality. When we started to dig into the depth of each one of the operational aspects of our bank, now we reached over 10,000 possible manpower reduction. So that's a big benefit for us to be more efficient against the backdrop of the very tough market environment. So those two dimensions, value-added services and reduction of cost and improving productivity, that is what we have to achieve. But in the meantime, what about the fintech companies and big techs? I think, in general, fintechs are our ally. They do not have as big client bases. They do not have the credential. They do not have the capital. So we can easily work together with those fintech companies. That's the reason why we have made a series of investment to those companies. Now, as for big techs, there is, I know, the big, the discussion and argument whether they can work with us or they would continue to be a threat to us. I think, the answer should be in between. In some area, we have to, figure out the way how they can help the growth, sustainable growth of the financial markets. And in the other aspect, we can work together. For example, their challenge would be, financial crime issue or data protection issue and potential resilience issue of operations and so on. And we can help, for example, to guide some of the, new players to figure out the way to tackle the financial crime issues. We just are working together with Japanese Icon company, and they really appreciated our guidance about how to build their money laundering capabilities. And also cloud services is one of the areas we can work together with the big tech companies and so on. So that's, I think, where we are right now. But another issue, I should not be too long, but how to regulate those industries. Mm-hmm. I think the point is to create a kind of collective resilience, including the newcomers and incumbent banks, not to create another financial crisis or turmoil. So that's what I think right now.
A number of really key points there, and we will pick up a bit further that one about the partnering with fintechs, both later in this discussion and also in the following panel today. Jose, if I can pose a similar opening question to you in terms of getting your views on the landscape for business models and market structure. What do you see as the future for banks and for the services that we currently think of as being banking services? Will banks continue playing their current roles in the economy? And will those banks increasingly need to partner with other firms along the lines of what Hirano-san has described?
Well, thank you very much, and good morning to everybody. I see the future financial system as a version of a very flat world, where there would be, and already there is, an extraordinarily intense competition. And there are good news and bad news for banks. The good news is that banks will continue to be around. The bad news is that not all banks will continue to be around, and those who are around will have to be quite different creatures from what they are even nowadays. And I think that the banking system over the next few years and already now is being subjected to several very important challenges. One challenge has to do with technology. I see that as a challenge, but also as an opportunity, and I see it as a challenge because there are some players who are non-bank players, who are big techs, who are masters of the universe in the management of technology and the deployment of technology. And therefore, banks really need to up the game in order to compete. The second is raising customer expectations. We live in a world where customers want convenience, want low costs, want service, want solutions. And again, that is something that banks need to raise their game to provide. And then there are two other things which are more longer term, at least one of them, the other is already short term, unfortunately, but which are very challenging. One has to do with social dynamics. And here I'm thinking of demographics. And for international banks like those who are represented here, social dynamics and demographics in certain parts of the world are very different from others. For instance, we are in Africa, and there the demography is still very expansionary in terms of very youth population. But if you look at Asia, and particularly some Asian countries, Japan would be an example, but China too, the demography is completely opposite. We're going to aging, and an increasing share of the bank clients are going to be people who are certainly not young and demand something different. And then there is a fourth challenge, which if we had had this conversation 3 years ago, I would not have talked about, but now I think is very important. And it's moving faster than I think I would like, which has to do with geopolitics and the geopolitical challenges. And for global companies who operate, and global banks who operate both in the East and the West, given the tensions between the United States and China, this is leading to complications. And I hope that as these tensions are resolved, these complications will come down. But if not, that I think is something to be taken into account. Now, why I was saying before that not all banks will be around? Because only banks that can make the best of the strengths would be capable to adapt and survive in this Darwinian process. And remember, if you think of the evolution of mankind, it is not the survival of the strongest, it is the survival of the fittest. The dinosaurs perished when the meteorites hit the Earth, but there were some small mammals there, and here we are. So it's the survival of the fittest, of those who have the capacity to adapt. And there I think that banks have to build on the things that are relative strengths, and I would mention a few of them. First is trust. And there is a bit of a contradiction between banks having lost, at least in part, the confidence of society following the global financial crisis, and still being the beneficiaries of the confidence of customers in terms of long-term savings. I think that banks still do very well there. The second is the capacity of banks to deal with risk management and complexity. And that is something where banks still have an advantage vis-à-vis big techs who are used to working in a much, much simpler universe. The third is regulation. That's something that puts off many big techs, but for banks, again, that's our bread and butter, perhaps unfortunately or not, but that's what it is. And the last one is the human factor. And I think that if you couple the best of technology with the human touch that banks provide, this is something which is an important source of comparative advantage in sort of competing with the new, very, very highly skilled technological players. Now, what do banks need to do in order to be able to build on these comparative advantages? And I would mention 5 things. The first is think client. We talk a lot about technology, but technology is an enabler. It is the client. We are in the world war for the client, okay? So thinking client, how to provide the best products, services, and solutions to the clients, that must be the overriding purpose. And then technology is an enabler, necessary enabler. And if this conversation had taken place 10 years ago, we would have talked about how important is technology in order to diminish costs and improve efficiency. But now, in addition to that, technology is critical to manage risks. And now with AI, we can do a much better job of managing risks than before. And it's critical also for providing a superior customer experience. So that's why technology is critical. But the client at the end is king. The third thing has to do with re-engineering the organizations. We are going to go to a world where banks become an ecosystem. In every bank would be an ecosystem in itself, where you would have very different ways of providing your financial services and solutions. You will build your own platform alone. You will be on platforms with others who partner with you. You will be on other people's platforms in which you plug and provide something. So there would be a variety of things, but I think that banking is going to take place increasingly through platforms. And organizations would need to be re-engineered in order to become a lot more agile and again, based on end-to-end client journeys. And last but not least, talent, people. We need to change the mindset, and that is already happening. But it's not just enough with changing the mindset at the top. You need to change the mindset throughout the organization, so that every single employer is thinking client and knows how to use technology in a way which is best. That change in mindset, bringing the people with the right skill, making sure that people get the right training on the job, and those who are not able to cope with this leave the organization, I think that's the other fundamental thing we need to do in order to be able to survive and to thrive in this very challenging world in which we live.
It's a great snapshot of the post-platform economy that banking is moving into. But I like the way that you really emphasise the point about the human touch and the human connection. And if I can give a quick shout out to a couple of IAF studies over the last 12 or 18 months, the surveys that we've done on the adoption of machine learning, both in credit risk and in AML, have really emphasised both the challenge and the strength of the people aspect with the technology. That on one hand, it's been very much about the way that we've seen banks and insurers implementing it is about putting those technologies in the hands of the skilled analyst. but equally that having the people skills to adapt to the technology is often one of the greater challenges that we face in making that adaptation. Doug, we've heard a lot already, I think a great outline of what digital transformation looks like, but perhaps if you could help us see this in some wider context. And in terms of the work that you have at S&P Global, what are some of the major themes that you're seeing across the economy and across the financial industry today, and how those will shape the industry for the next decade?
Thank you, Brad, and thank you also for the IIF for the invitation. And for me, it's great to be back in Tokyo. I lived here for 6 years, and it's always a pleasure to be back here. Well, let me look at three big themes and then talk about technology. The first is something that I would call unprecedented, and we overuse that word unprecedented, and what I will talk about truly is, and that is living in a zero interest rate environment, where the 10-year bond in Switzerland is negative 40 basis points, in Germany and some of the other European markets, the interest rate is now again negative, in Japan it's negative, and this has now been for almost 10 years. This is truly unprecedented. It's one of the themes that makes financial institutions really struggle to be profitable when you have low growth expectations and zero interest rate environment. And so this is going to be one of the critical themes in the macro environment, macroeconomic environment. How can we revitalize growth? What sort of strategic and structural reform needs to be made, as opposed to just having the central bankers being the heroes of the story? So interest rates, economic policy is the first. The second is geopolitics, and geopolitics is also shaping and framing the interaction of different countries and trade blocs around the world. And obviously, you've been talking about this yesterday as well, the situation of the US with China and the situation in the US of Mexico, trying to use tariffs as a theme to get people into line, and in particular with the Mexico situation going from immigration with a trade agreement in place, and now trying to throw boxing gloves into a tennis match, a way to bring a very difficult tariff approach to something that's not necessarily going to be solved with tariffs, to bring people to the table. So the geopolitics, the populism, what we swing with the votes, the trade bloc, the United States, China, United States, Mexico, et cetera. These are things we cannot not pay attention to. It's critical because it's going to shape our business models. The third is climate. And when I was visiting Copenhagen and Stockholm and Oslo 7 or 8 years ago, climate was on top of mind. And it's now quickly started flowing around the rest of the world. It's in Australia, it's in Japan, it's in Southeast Asia. It's starting to come to the United States. And there's no centralized, standardized information and methodologies to measure climate change, and thus this growth of ESG and environmental, social, and governance data and analytics platforms, so financial institutions, corporations, governments can use standardized ways to measure their impact and measure what that means for their own portfolios. So these are the three big macro themes. There's many more, but I would say macroeconomic, geopolitical, and then climate. Now, a little bit of bridging what we've talked about before and this third theme on technology. Technology is something that's impacting every single business model. No matter what you do, you're being impacted by technology. At S&P Global, we're no exception to that rule on technology. And let me tell you a little bit about what we've done. 3 years ago, we had 90 billion data points in our systems. 3 years later, we have 250 billion. There's this absolute avalanche of data that we're picking up, and we're a data company, so we're managing it, and we're linking it, and we're putting it together. We're making it consistent. We're making it clean. We're delivering it. But as we went from 90 to 250, our clients also are doing the same thing. The amount of data they're getting that's coming in through IoT or through internet interactions or mobile interactions with their customers. It's creating a completely new dynamic for the kind of people we have to hire, the way environments are developed, business models are developed. And what we've done at our company with the technology is think about 3 different phases. First is data ingestion. How do you bring it in? The next is data processing. How do you turn it into a rating or an index or a price benchmark? And then the third is customer engagement. We've been investing across the entire value chain, investing in our own employees through training programs, one called Essential Tech, a data sciences academy. We've made $500 million of acquisitions to buy artificial intelligence and machine learning companies so we can get them quickly into our company. And then we also have a venture capital portfolio. We felt like we needed to keep our toes in the water to understand what was going on in the VC community, but we don't consider ourselves venture capitalists. We put aside an amount of capital that we felt was valuable for us to have invested in VCs, and we've got about 17 investments now through 3 VCs and some direct investments, so we can see what's going on in the technology world. When we talk about what's happening to banking, what I see is a fragmentation. There's each little piece of a bank that somebody can do faster or cheaper or better, there's people out there doing it. They're not necessarily worrying about disintermediating a bank, they're worrying about disintermediating payments or trading or clearing or customer experience. And so I think that the banks need to be very, very cautious about what's happening with the disintermediation and all the different ways that it's being done in a very fragmented way. And it requires financial institutions to put technology at the center of their operating model and invest very rapidly, and also ensure that they're looking at it with all of these trends coming at us.
Doug's very well anticipated a couple of the excellent questions I've already got coming through from the audience, and we are going to pick up a little bit further about fintech and some of those sustainable and climate issues a little further in the discussion. Before we do that, though, let's turn now to Solan. And Solan, you've often reminded me or corrected me a couple of times in the past very gently that Ping An is more than just an insurance company, albeit a very large one. You're also really a technology company in the modern day, and indeed you've made some very considerable fintech investments in recent years. How do you see the continued evolution of business models in this area?
Thank you, Brad. Good morning, ladies and gentlemen. Yeah, Ping An have been spending 1% of our income into technology research since 10 years ago. And now we have 5 core competence in this area, which is AI, blockchain, cloud technology, biometric recognition, and big data. We have been using these new tech areas in all areas of processing nowadays. I mean, like in the case of call center, 2 years ago we had 30,000 staff. With the robotic customer services, robotic call center staff, we cut that down by 50% now. We target to cut it down from 30,000 to thousands, maybe in 1 or 2 years' time. For all the new product and services that we invent now, we would first consider the robotic program rather than human resources. Like in the case of credit approval, small loans credit approval is 100% done by AI. And we have got rid of 100% of our sales outlets and retain only a few major customer servicing centers throughout China for small loans, which happen in our Puwei banks and a number of subsidiaries. Apart from using new technologies in process and services, we start using it for projections, estimations of new process that's going to take place. Like in the case of smart traffic that we do for Shenzhen now, we actually use big data to project where about the automobile accident is going to happen, and we place our claim assessor within 100 meters of that spot where accident is going to happen. So when it does happen, our claim assessor would arrive at the scene within 5 minutes and at most 10 minutes, which is being our KPI, and then they would do the claim assessment using the phone, going around the accidents of that car, assess the claim damages. And if the claim amount is agreed between the driver and the company, then claims will be made within 5-10 minutes within at the site, and that would reduce all the claim assessment form application, the claim tribunal, and so on, and that has cut down significantly of our costs, and it's more accurate than a human being would do. So I would say that the shaping of the financial services in China is the faster that you move into AI, robotics replacing human being, that would be the key factor for success. Yeah.
I'm glad you give that example about the smart traffic scenario, and I think for most of us outside of China, we've heard a bit about the Smart Cities initiative, but not well understood it. So fascinating to hear how that actually leads to insurance outcomes, and it's something that I want to get you to elaborate on a little further in a moment. But let's pivot a bit to talk about some of the challenges and barriers. And Hirano-san, I thought you gave a great outline there of the criticality of partnerships between incumbent firms and new entrants. And I like the way you made the point there about how banks have trust, have existing customer relationships, have great customer reach. On the other hand, we have the fintech firms who are great at innovating but lack that customer reach. And there's perhaps the potential for the symbiotic relationship in bringing those together. So perhaps as you pursue that innovation, and as banks are often needing to bring in capabilities from outside, are there particular barriers or challenges to sourcing or embedding new technology solutions in your business?
Well, that's an excellent question, and that's a big challenge for us right now. I mean, there are two issues, I suppose. The first one is the culture, and the second one is talent. Let me start with the culture. I mean, we as incumbent banks and the bank as a kind of social infrastructure, we have been under the very strong pressure from our clients and society. We have to be perfect. And, in order to keep the quality of operation and trust or credibility, we try to build everything in-house. So in-house first mentality and the culture is something we have to change. I mean, in order to be creative and in order to keep create new relationship with the startup companies and tech companies, we have to be very much open-minded. And also, if it comes to the technology development, we should not really, rely on our own in-house resources. So, for example, the cloud. We had a kind of very high psychological barrier until a few years ago. We have to build everything in-house. That's the reason why we made a huge investment in Japan to build the backup center, which cost over $1 billion. But look at the potential of the cloud, which gives us not only the low-cost operation, but also perhaps better protection against the cyber attack. So relying more openly on the outside resources, I think that's the critical, the success factor going forward. But we have to change our mentality first. And then another one is which is related to what I said, perfectionism. I mean, in order to avoid any disruption of systems operation, we try to test the system 100 times, right? And that's the reason why our development of the system slows and it becomes more silo. So we have to change those things into the direction of agile and also fail fast culture. That is the first point I would make, so the change of the culture. Number two, I think the talent, that's absolutely the short, in particular in this marketplace. So we have to train the people to be equipped to new technology, not only for technology, but also the way of thinking fitting into transforming the business model, fitting into new technology. So both sides, technology and business people, we have to re-educate and retrain. And more fundamentally, I think we have to change the educational system in this country so that we can, grow the volume of talented people who has deep knowledge about the technology and so on. Now, what we are doing right now in order to address those challenges is to create the new entity, which is a spin-off from our company, to implant the totally different business culture. So starting from the business attire and working style and compensation and career making and so on. We call it Japan Digital Design, where we employ totally different people from the different industry, e-commerce, telecommunication, and academy, and so on. And by connecting those new animals farm to our traditional banking people, we are trying gradually change the culture of our very conservative, the culture of our bank. So I think the largest challenge is how to change these cultures from the top to bottom. And in particular, what's difficult to change the culture is middle market. So top management is exposed to the dramatically changing market environment, and the younger generation is very flexible. But in between, those middle management people, how to change their motivation culture. That is the challenge for now.
Yeah,
Thank you.
absolutely. Jose, if we can continue with this theme of challenges and barriers and also continue with the theme of partnering with other sectors and other players that you alluded to earlier. From a policy perspective, what are the pressures that we face in this evolution? Is it just a question of the right regulation, or are there broader issues that are impacting banks' ability to innovate?
Well, I mean, you mentioned regulation, and that, of course, remains a very important part of the external environment in which we operate. And I'll provide a couple of examples in a moment. But let me just take up first the issue of partnerships. I think that in the world in which we live, given that there are so many generators of good ideas in the technology field, a partnership is a necessity. And I'll just give you a few examples. We have at Standard Chartered something we call Standard Chartered Ventures. And one of the things we do there is to partner with fintechs throughout the world to generate new ideas that we can apply in the business. And we have explored 500 such ideas. We have sort of undergone with proofs of concept for 50 of them, and now there are 20 in the process of implementation so that we can do better things for our clients. All the partnerships that we're exploring, for example, are partnerships with Alibaba. And we're applying those partnerships for the provision for remittances payments, which is something very important. With Ant Financial, we have started recently, joining forces to provide remittances facilities between Hong Kong and the Philippines, and now we're extending that to other corridors within our network. And this is something which not only favors sort of financial inclusion in the large, but also which allows people sending these remittances to do that at a fraction of the cost of what they pay now, even through normal banking channels, by combining our banking services capabilities and non-financial sort of technology. So I think that's something which is very important. In Hong Kong, where we have a relevant conventional banking operation, we have been partnering with both Chinese and Hong Kong players to launch one of the first digital-only banks in Hong Kong. So these are some examples. Now, in terms of regulation, Let me just say three things about regulation and technology, which I think are important. I said at the beginning that I envisage the financial system as one where there is more flatness in terms of the competition. But then there is something which is sort of intersecting with that in a negative manner, which is the fragmentation that we have talked about earlier on in this conference, and that was referred to beforehand by Doug. And that's something which I think is very important. We're seeing in terms of banking, fragmentation in terms of national authorities attempting to ring-fence capital and liquidity, providing moral suasion, if not something stronger, in favor of subsidiarization, which makes banking more expensive, or sometimes just not being very happy with some of the outsourcing things that we are doing for the sake of efficiency, because they're concerned about sort of data sort of control, but also with jobs. And that is something which is important. So I think that in the regulatory field we're seeing these pressures, but I think that there are three things that we would like regulators to do. The first is to thinking how important it is for banks to adapt to the new technology, to be forward-looking in their thinking and flexible in their approaches, so that they can strike the right balance between their natural wish to safeguard financial stability, and they're paid for that, with not putting brakes on progress and preventing the sort of financial innovation that needs to happen linked to technology. And their experiments like the sandboxes in London and Singapore, I think have been great. We have benefited from them. We have also benefited from a very cooperative environment in Hong Kong. So again, we have even entered into partnerships with the public sector to develop many technological capabilities for cross-border payments, trade finance, and so on. And the second thing I would ask regulators is to think of making the world really flat, in the sense of regulating by activity rather than by legal form. So if you do something which is the same as other entities do, entails the same risks, you should be subject to the same rules. And again, there is an area at present where we are not subject to the same rules. And I think that's important for both us and for big techs. And big techs should be either coming into the banking domain, getting a license, or they should be subjected to similar rules for performing similar activities. And the last thing is international consistency. For example, Hirano-san was talking about the cloud and how important it is. Mm-hmm. When you work in very different markets, as I'm sure that you've experienced, there are some regulators who are very happy with the cloud. And there are some regulators who are very unhappy and worried about the cloud. Yes. So it prevents you from having solutions which are sufficiently global and efficient to your business. So this would be my three asks to the regulators. And I think that regulation has a very important role to play, but striking this balance between safety and development and allowing financial innovation to go through, I think is very critical at this stage.
I think that point about cloud adoption and where there's discrepancies between home and various host regulators in their expectations is a really important one. We produced recently a 3-part series on cloud at the IIF, and I've been encouraged that from a lot of the engagement we've had with regulators, we've seen that the conversation has perhaps moved past some of the initial objections on cloud and gravitated a lot more now to the, I think, really key issue of the concentration of the providers, which is the next piece that the IIF will be setting out our views of different models of dealing with that. I'd really like to point you address there, Jose, about the working with the supervisors, and last week in Washington we had the IIF's Digital Finance Symposium. Pat Chalkis from the Ontario Securities Commission and one of the founding members of the GFIN Global Sandbox was very keen to stress the point that they're very anxious to see more safe and secure innovation deployed into the market, and that they absolutely want to encourage the greater and earlier engagement by the private sector on all potential developments. Let's continue with the theme of regulation and fragmentation somewhat. And so, Lan, if we can pick up particularly where I think there's a lot of anxiety around the issue of data localisation at the moment, as well as Ping An's leadership within the Chinese market. Obviously, you're a very active player across quite a lot of different markets where you've got some very considerable investments. Are there particular restrictions in terms of things like the ability to move data across borders that impede your ability to operate as an international business?
For Ping An, we feel that with the human resources, human being is being replaced by robotics now. Our op risk modeling is reducing because the people where we manage the op risk is not there anymore. But the increasing risk will be on the regulatory side because the law and regulations have not quite matched up with the new development in the AI and new technologies. And so whenever we have any new product and services being launched, there's a lot of communication and education to the regulatory authorities. And secondly, the traditional risk management modeling meant to manage the product, services, and people. Now the focus is shift to technology, cyber risk, the big data risk, the compliance of the acquisition of big data, is the technology modeling producing what it should, and so we are projecting where and when the risk is arising. Is that producing accurate results? So that is a major change to the organization, especially on top management and risk management organization. And so we cannot expect to recruit a team of people who is the top of the ladder on technology anymore, because everywhere is fighting for that type of people in the overall organization. So we start to partner with some outsourcing companies, like in the last 6 months, for any new product and services that we launch now, we actually contract the white hacker companies that before we let those products or services to go live, we recruit the white hacker companies to hack our internal companies and operations. And there are a number of companies like that, that they recruit a team of technology kids. And when they look at their product and services and they find ways to hack into the companies, and whether for fun or stealing money, and they actually help us to conduct to identify the risks that we may be facing. But if you let the product and services go live as it is, you never know the type of risk that you may be facing. And so the way that we manage the risk now is a different game from what it was before. Interesting, but very challenging. Yeah.
Doug, you alluded earlier to the increased demand for data and analytics, and I guess in some ways the changing nature of the specific analytics sought, the challenge in keeping pace with that. With the added emphasis on sustainability and social responsibility, I'd like to discuss the challenge of getting sufficient quality data in those areas and how you see the evolution of data and metrics across the various components of E, S and G.
Yeah, this is definitely one of the growing areas. When I talk about it as an analogy, we're kind of in the second inning. This is still really being developed. There's not a lot of consistent tools, but there are 49 of the exchanges globally have said that they're going to start setting standards, not listing standards, but reporting standards. 350 of the world's largest asset managers have signed up for the UN PRI. You have an organization like Amundi, the largest asset manager in Europe, which has said that by 2021, they're going to consider ESG factors for every single investment they make. And then you have here in Japan, GPIF, and I know Mizuno-san is speaking later today, who has set out an approach to an ESG and environmentally sound investment strategy and using many different tools and developing that. So as we look at this, there's, as you said, there's no standards. It's the information you get, it's self-reported, it's not something that's audited by an auditing firm. There's two organizations right now that have been doing a lot of work that we're working closely with because we think they have the chance of setting the standards. One of them is the Task Force for Financial-Related Climate Disclosure. I believe that Mark Carney talked about it yesterday. He was the sponsor as the head of the FSB along with Mike Bloomberg. And the other one is SASB, the Sustainability Accounting Standards Board. And so the two of these have started setting out some standards for reporting and frameworks that can be used by companies and organizations to assess their ESG. At S&P Global, we've been in the ESG reporting business for over 20 years, but maybe in a very narrow way. We've had the Dow Jones Sustainability Index for over 20 years. And in the last few years, we've started adding more and more capabilities, having recently bought a company called TrueCost, which has climate, water, waste output reporting for over 12,000 companies. And we're building this in a standardized database so we can build indexes, ratings, analytical tools. And we're seeing very high demand for these tools from the different organizations that are working with us. Just very briefly on ESG, G is probably the most developed. We know around almost any market in the world, if you asked about what are the G standards for governance, they're independent board of directors, an independent audit committee, an independent compensation committee, certain disclosure standards, et cetera. And whether a country quite has those standards or not, the governance standards are pretty well known. The environmental standards are in development. They're clearly heavily weighted to environmental output, which would be carbon, water, and waste. But then there's other factors related to how do you offset those. If you have a low carbon footprint business, but you're using office space and traveling around a lot on aircraft, are you offsetting that carbon footprint that you're actually having through those activities versus a heavily extractive type industry that creates a lot of carbon? The S-Space is just now finally being developed. What are the standards around it? And we're working with the SASB and other organizations to help develop those. And they range from things like diversity and inclusion at your board of directors, your community responsibility activities in your company, to labor standards. If you're in the extractive industries, are you using slave labor or are you using child labor? Are you in certain agricultural industries that are spread out on the world? What kind of labor practices do you have? So the ESG, as I said, we're in the second inning, and it's a really exciting area. At S&P Global, we are already launching many projects, many products, and what we're doing is we've decided to put it all together in one single database, and we want to be relevant and working closely with these organizations like TCFD and SASB as the standards are being set.
Doug's comments there allude to a couple of the audience questions we've had through. Before we go into a little bit of a rapid-fire conclusion here, I want to work in one of the other questions that we've had from the audience, and that's relating to, I guess, the platform economy or the post-platform economy and the opportunities that creates for financial firms in other industries. So in terms of where there's the threat of disruptors cannibalising our sector, are there actually new markets where banks can be using the platform solutions we're building to provide a platform for other things like medical advice or online purchases or legal and accounting advice? If anyone wants to particularly comment on that one?
Well, then,
please, yeah.
Well, we have been engaged in many tech companies, but in particular, we are very much interested in distributed ledger technology. Mm-hmm. So let me give you two examples. The first one is we have just announced our collaboration with Akamai, based in Boston, which is the global largest content delivery provider as well as security company, and with which what we try to develop is the global-wide payment platform, which we call GoNet, Global Open Network, for the future huge volume of payment needs associated with the perhaps IoT. IoT will create the huge flow of the transaction, which will create also the large and explosive volume of payments associated with those activities. And in order to cope with those micro-frequent, large volume transaction, we need to have a transformational technology. which could be distributed ledger, blockchain-based technology. And the new technology we jointly developed with Akamai is able to process the transaction 1 million per second with just less than 2-second latency time. So that is really, the 10 times or even 20 times much faster and large volume transaction processed within those edge computing system, and which could be used for everything. We will apply for the credit cards, payment system service in Japan first, and then we'll gradually expand to other parts of the world. So that's one of the examples. And that uses the private blockchain. It's not open. And number two, there's also announced just a few days ago, including the UBS, actually it's there, that's called Utility Settlement Coin. We jointly set up the Finality International, which aims at the cross-border interbank and trade settlement system. At this point of time, we cost a huge amount of the money to settle the transaction associated with trade and interbank transfer. But this new technology will enable us to make the payment within the second, possibly, and that will use the kind of virtual coin or crypto asset, but that the value of the asset is linked to individual real currency, including US dollar, pound, and euro, and Canadian dollar and Japanese yen. So we will be able to create the kind of global, low-cost, high-speed, reliable network by using this blockchain technology. Of course, blockchain has different problems. How to regulate this kind of globally connected, non-centralized, centrally controlled system. So that will impose some challenge to regulators and to industries. But the collaboration between private and public and the global players will probably enable us to achieve our goal with a very safe and sound manner.
I'm looking forward to discussing that point about regulation of decentralised technologies tomorrow further in Fukuoka as well. As the clock runs down on us, let's get a quick comment from both Doug and then Jose, and then Solange, I'm going to give you the final word on smart cities after that, but please,
Yeah,
Doug.
just a quick word on this topic. The essence of your question for me is quite interesting if I think about the difference between fintech startups and traditional financial organizations. When you're in a traditional financial organization that's deposit taking or doing trading, you think about regulation, you think about privacy, you think about protecting the sanctity of that information around your client. And it's a very different mindset that when you're in a fintech and you're thinking about extracting that data, you don't care about a regulation, and you're extracting that data so you can use it for a completely different purpose, to sell somebody else. Yes. If you're running a fintech payment service and you see that people just got back from a vacation in Florida and Miami, you start trying to sell them more tickets to Miami and find out maybe what kind of hotel they went to, and you start selling information to hotel chains and airlines and others to start selling travel services. That's not in the mindset of banks and insurance companies. I think that there's a fundamental difference in the mindset of a fintech and the data analytical world versus the financial institutions world. And I think the financial institutions world needs to decide how far do they want to head towards that kind of a business model as they start developing their own business models.
Jose?
Right. And I fully agree with this, but I wanted to come on something that on sustainability, a topic that Doug mentioned before, and which I think is very important. And I found fascinating the data gathering exercise that you mentioned. And given that this is a gathering with many financial sector participants, I just wanted to just reiterate that sometimes from the financial sector there is a perception that all these environmental sustainability issues is something that comes as a challenge in terms of you have to disclose, you have to develop now risk management frameworks to better understand climate change and how it impacts your assets, both from the physical point of view, but also from a market transitions point of view. But I think it's also, this area of sustainability is also a tremendous investment opportunity. And I think that there is a great opportunity for the financial sector to help the world move towards a low carbon environment. So I think it's the right thing to do, but I also think it's a smart thing to do.
It makes business sense as well. Yep. I know we've hit time, but if you can indulge us for a couple of minutes longer. So, Lana, I think the piece around smart cities is really fascinating, and what you touched on about the smart traffic initiative earlier in particular. Could you give us just a quick synopsis of Ping An's work with that smart cities initiative?
Yeah, I think I may add a conclusion to this topic. China is implementing smart cities top-down. And by the end of the year, then at least 500 cities are being targeted at smart city initiatives. The objectives of that smart city initiatives is meant to raise the people above the poverty line. Because we still have a large population of people living in rural areas, third and fourth line of cities, where the medical services, education, pension, green environment, and all these basic needs, they are still not there, but the infrastructure is ready to deliver the services to those populations online. A lot of people ask me what's going to happen with the China and trade war. How would that impact China? We're actually conducting that study that if you consider the product and services, the health services, education is being delivered by AI platforms, one-on-one delivered to those people that are in need. So instead of the original plan is meant to go out one Belt, one road, and now we, from the outside, it looks as though that development plan is not as, it's not coming out as we planned. So we would move back to encourage more internal spending within China. And then we would deliver the smart city initiatives much faster than we originally planned. So I think for government, maybe the raising of people's standard above the poverty line will come 1 to 2 years earlier. And then when the people is able to have medical services, pension, education, and so on, the practice is to save 50% of the income in case we would spend all when we get sick. And you probably don't need to do that anymore because you have those products and services. So people would dare to spend what they would have saved. And how would that would change the society? How would that would change the economy? How would that would change the behavior of people? Maybe I let you know in the next round when we meet again.
It is truly the future of finance. That's a fascinating case study that I think melds in with that last audience question, and probably also to the point that, Doug, unfortunately we didn't get time to talk about of the future of pension systems and investment systems as well. As you can tell, we've hit time and we realise we're encroaching on your networking break at the moment. But as you can see, our panellists have many more great insights to share. Doug is actually going to join me later today to record for our FRT podcast and to share some of the things that we unfortunately ran out of time for today. Solan has previously been on our podcast back on episode 25, and we'll make sure that we pick up more of the great examples that Jose and Hirano-san have shared. In particular, we need to do an episode sometime on that Hong Kong and Philippines remittances partnership that you have with Ant Financial. So in the interest of time, I won't try and summarise the discussion. We'll leave it there, but just to, of course, mention that my colleague Conan French will be picking up some of these themes further in the next session after the networking break. Please join me in thanking our panellists, and back to you, Chris.